After a string of failures in the last several years from multiple business segments, including the most recent, The Acolyte, you have to start asking yourself if Wall Street is waking up to the Walt Disney Company. Renegade Online. Wow, what a week so far. I'm sitting here, I've probably got at least a dozen different tabs open, news articles, most of them related to The Acolyte. I want to read through some of the journalists out there, and in some cases, not all, I use that term loosely, and their reactions to it. The Disney stands are just, they have lost their mind. They're making absurd comparisons out there with The Acolyte and other things that came before in terms of how terrible this is, what a tragedy, blah, blah, blah. There's been so many videos out there. It's just absolutely, it's mind-numbing. And to Disney's credit, like we talked about in the video yesterday, at least they may finally be showing some signs of sense, right? And it's not just The Acolyte. We've seen things from Marvel, right? We've seen a turn there. We've seen discussions about how they're going to seemingly get back to form. Admitting without admitting it that phases 4 and 5 of Marvel were total disasters for the Walt Disney Company. They were. And by disasters, I'm not talking about just bad movies, bad TV shows, bad stories. The most important aspect is bad financial returns. That's the problem. That is also what's going on with Star Wars. They cannot continue to have multiple, if not all, of their major Disney in-house studios failing at the same time. Pixar was failing. Walt Disney Animation is still failing. We finally got a win with Pixar over the summer with Inside Out 2. Marvel finally got a win with Deadpool and Wolverine. This is, and believe me when I tell you, behind the scenes, what's probably finally happening that is years overdue are that a lot of the more influential Wall Street folks, big investors, have probably been making comments to Disney behind the scenes. There are things that they discuss on earnings calls, questions that they'll ask on earnings calls, and then there's the conversations that happen off the air. And there's nothing wrong with that. We're not talking about trading on necessarily non-public information, but there are conversations that tend to happen that aren't public. And that's when somebody at a major investment firm will call Disney, hey, we own 4% of your outstanding stock. We got some questions. What are you guys doing? This is what investor relations people at Disney, like Alexia Quadrani, somebody who Bob Chapek brought in, what their jobs are to talk about with these folks. And they're probably sharing more concerns in the last year, at the very least, maybe 2, about what is happening, not only with Disney Plus, the major losses that keep piling up, the box office catastrophes that are going on. Obviously, there has been pressure brought to bear. And this is what I want people to understand, and this, especially this audience, because this audience, as I've said before, you guys need to understand how influential you are, because without you guys, I'm nothing. I'm nothing, right? I'm just a guy sitting in front of a microphone prattling on about bad Disney products. If nobody's watching it and nobody's boosting the likes and nobody's boosting the views, watching it, genuinely interested, and then telling their friends about it, and then having other publications pick it up and run with it, think about 2 or 3 years ago when virtually nobody out there in the space was talking about, and I say virtually nobody, not nobody, but almost nobody by comparison to the vast number of channels out there and publications. Nobody was really talking about what do movie studios really bring home? What do distributors in Hollywood really bring home from the theater compared to what they're saying the budget is? By the way, is the budget actually what they spent, or is that just what they're putting out publicly? We know what Disney's story is. Budget is one thing. Real expenses are radically higher in many cases, especially with Marvel and Star Wars. Without you guys getting behind me and helping me boost the signal, right? Nobody's paying attention to this. This has made a difference. And I think we may be finally starting to see a turn. And of course, the other thing that has been precipitating this in more recent months has been the fact that Disney parks, even though they come out on earnings calls and they show, hey, we made more money in the third fiscal quarter this year in 2024 than we did in 2023. Yay! But was it enough? Why wasn't it more? If we've got inflationary pressures of this, top-line revenue should have perhaps been in line with that, but for the fact that actual attendance, people through the gates, butts in seats, as it were, are not really that much up. They're maybe flat or down. And with outside threats like Epic Universe coming in, that's going to maybe not put, it's not going to put Disney underwater, but it's certainly going to threaten the relative ratio of dominance they have. Epic Universe could become a huge new thing next summer that it might depress some of that Magic Kingdom turnout even more. Think about if you're a park goer and you're going down to Orlando, Florida, and you're a typical American family. And that is if you're a typical American family that can even afford to go to a Walt Disney theme park in Orlando anymore. That's another conversation, right? But you're going down there, you're planning your trip, you and your wife, or you and your husband, and you've got 2 kids. You know, a week at Disney World is going to cost you $5,000-$6,000. Probably. If you're staying on Disney property, even in one of the more modest hotels. And you also want to go to Universal Studios and Epic Universe. You've been to Disney a couple of times. Where do you think these people might be more inclined to spend their additional, let's call them souvenir dollars? You know, we think about in Disney parks all the time, and we hear on earnings calls, what is the per capita spending at Disney parks? Has it gone up or down, right? For every guest that walks in the gate, are they spending more money this year or less money this year or the same amount of money this year as they did last year? Especially when we're in an inflationary environment that has been this hot, you would expect to see, just on the surface, that per capita spending continuing to rise at least at a similar pace to the overall inflation rate. Hopefully even higher, because the CPI doesn't always take into account particulars of consumer spending. But if next summer rolls around and those same people think, we've booked our room, we've got our park tickets for Disney and Universal, and we have an extra $500 to spend to buy souvenirs and stuff, where might many of those families be more inclined to spend those dollars? Are they going to spend it at the same park that they may have been to 2, 3, 4 times over the years with their family in some cases? Or might they spend it in a place that's brand new, that has new stuff, new things, new shiny jangling keys, right? That's Epic Universe. Super Mario Land, especially, a new Harry Potter park. This is what is more of the threat, I think, my opinion, to Disney, is not just the traction and the people through the turnstiles at the parks. Epic Universe is certainly going to have an impact on that. But I think it's going to come down to what the per capita spending looks like. And I would not at all be surprised. I'm not saying it will happen. I'm just saying that I would not be at all surprised if we get to around this time next year, and the second calendar quarter is reported for both Universal and Disney, and we see a greater increase in per capita guest spending at Universal than we do at Disney. And especially when we get to the third calendar quarter that would get us from July 1st to September 30th. So that's going to be something to look at. A little bit of a Renegade early prediction here for next year. Just a thought. Keep that in the back of your mind. I want to see how that pans out because, Disney's talking about raising ticket prices again in parks. Some of this has to do with inflationary pressure. Some of this has to do with, the recent strikes in the California parks that's going to raise labor costs rather significantly. And Disney may try to, as most businesses would, especially if they have the reach and the scale of a Walt Disney Company, they're going to try to amortize those costs out, meaning that they might not raise the price in Anaheim to everything they need to maintain the profit margins to cover the new costs under the new labor contract. They may raise it most of the way in Anaheim and then cushion it with a little bit of a price hike in Orlando and maybe other parks around the world to bring in a total dollar value that will satiate what they need to do in California. Just a guess, but that might be something that they look at. So we're going to see park ticket prices hike there. But what Wall Street is looking at currently is the issue with Disney that there is a softening in parks. And Bob Iger really didn't give them much to sink their teeth into in the forward guidance, right? Didn't really give a rosy outlook for this next quarter. The one that we're in now, the one that they're going to report in November, the final fiscal quarter of 2024 for the Walt Disney Company. Third calendar quarter, but final fiscal quarter for Disney. So that's going to be something to pay attention to. I think that's going to be a little bit interesting. So we'll keep our eyes peeled on that, and we'll be back here in November for sure. Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.